Hi, welcome to Westpac's weekly update. My name is Matthew Hassan, Senior Economist at Westpac Economics, talking through the week in review and the week ahead. Well, it's been a blockbuster week for the Australian economy with Tuesday's RBA decision giving a surprise 25 basis point rate cut, the budget on Tuesday night, and quite a bit of secondary data out as well, events offshore. If you're interested in the summary around the budget, please refer to our reports on the topic. Enough to be said for the macroeconomic view, it's not a particularly important update. Instead, the RBA decision was really the big deal this week. The RBA decided that the balance of risks around growth and inflation had tilted in favour of a further easing in policy. That's after leaving rates unchanged for 12 months. As we go to press today, we're looking for further additional detail with the RBA's statement of monetary policy due out in about an hour. That's going to provide pretty crucial indications around its inflation forecast in particular for 2017. We don't expect any changes to its growth outlook with a midpoint of about 3% growth this year and next. But on inflation, its forecast for how long the inflation result may stay below its 2 to 3% band will be a pretty important indicator as to whether the RBA expects it will need to do a follow-up move. On balance, we do think they will move again. It's interesting that the focus of the bank has clearly shifted from the growth outlook, which still looks reasonably okay, reasonably sound, to an inflation outlook that now puts underlying inflation clearly below the RBA's target range, and we'll be looking to see how long they expect that to go on going forward. In terms of the other data releases this week, mostly slightly positive. We had house price data for April showing a solid 1% plus gain for the month. Housing approvals were also up in March. Retail sales showed a 0.5% gain for Q1 as a whole, which is a bit more subdued than recent quarters, but still a positive result overall. And the NAB business survey for March, April showed a bit of a pullback, but nothing too untoward. In terms of the offshore developments, really we're looking into tonight's non-farm payrolls and unemployment rate update out of the US, so we've still got a major event to come heading into the weekend. We expect to see 210,000 gain in jobs and the unemployment rate dipping back below 5% to 4.9%, so a generally positive tone there. But more broadly speaking, markets have had a risk-off tone this week. For the Aussie dollar in particular, we've seen a sell-off. We're now back below 75 cents US. Looking to the week ahead, luckily we get a bit of a breather for team economics in Australia, but there are a couple of notable releases out on Wednesday. We get the Westpac Melbourne Institute Consumer Sentiment Index update for the month of May. Now, critically, this is the first post-RBA cut, post-budget reading on sentiment, so it's a pretty critical update on how those measures have been received. In past years, or last year, we had a similar situation with the budget coinciding with an RBA rate cut. We got a decent 10 percentage point bounce in sentiment that time round. Whether we get something similar this time around, I'm not so sure. Certainly it's going to be closely watched, and you'd expect at least some positive reaction from the consumer. We're coming from a starting point that's below neutral and cautiously pessimistic territory, so one to watch definitely. Around housing finance approvals, it still looks to be a bit soft for March, although housing markets have clearly firmed early this year with both auction clearance rates and prices putting on a better start to the year than they had finished to last year. The industry data around finance approvals does suggest it was still soft for owner-occupiers in March, so maybe we've had a bit of a recovery in investor activity. Again, the data will be watched closely, but I think at this stage it's really the statement of monetary policy due out shortly and the non-farm payrolls tonight, which are really going to send the main signals for the market over the next few days. Thank you very much.